Bitcoin has seen its value more than double since its September lows of around $3,000. To some, the cryptocurrency was consolidating to a more realistic level of value. But now we're back up over 7,000. And so where do we go from here? With a look at how to trade Bitcoin and another impending fork, we're talking now to Francis Hunt, the marketsniper.com. Francis, welcome back to us here at IG. We'll talk a little bit about how to trade this at the moment in just a couple of minutes' time. But at the moment, I want to talk about why we've got this accelerated value again for Bitcoin, now over 7,000.
Yes, well, what's happening with all the forks is that essentially those holding Bitcoin get the free, inverted commas, coin. So if you're not in Bitcoin, you don't get the new fork coins. If you're familiar with the fork that happened previously when there was Bitcoin Cash, all those that were holding Bitcoin got the similar proportionate allocation of cash. So in anticipation of that event, there's a lot of thinking that the Segwit 2X and all these Bitcoin Gold, which was just prior, are driving the interest in Bitcoin. In fact, this year, it was a tale of two halves, as they like to say in football. It was all about the alts up until June. In other words, we had Ripple running, coming a second, then it fell away badly. We had Ethereum then coming biggest run. A lot of people married the coin, and since the second half of this year, it's all been driven Bitcoin. And we've been very fortunate because we've urged short on the early alt runs in the second half of this year, and we've managed to accumulate Bitcoin as the asset. So your benchmark should be Bitcoin.
Okay, there's a lot going on there in your answer. We'll talk a little bit more about, there's another impending fork coming up. I want to talk a little bit more about forks as well, and also the ×2, the doubling you were talking about as well, which is another interesting facet. Let's put those to one side and take a look, if we can, at the chart of Bitcoin.
Sure.
This is a 4-hourly chart, so we've got candles each representing 4-hourly trades. Now you've drawn on here a couple of things. You've got that red dotted line at the top, which is the 7,000 level. Technical analysts love nice big round numbers, but you've also got here a head and shoulders. Now there's a couple of things going on in the head and shoulders, if we can focus in on this. What is it that you've got here which gives you any indication as to where the currency is trading?
Yeah, well, when we ran into the 3,000 level, you'll note that black line just before your head and shoulders, just below it. We tapped up against that as resistance. The market was looking at the 3,000 mark, but it touched 3 times, or it came close 3 times and then pulled out. Then it smashed it, and we started to get the left shoulder that you're now indicating as a positive run through. We do head and shoulders a little bit differently. We look for the key level, the round number, and the 4,000, 4,100 level was that. And there needed to be a little bit of letting off of the froth. The China narrative came with a regulation, and this was the fundamental driver that saw the sell-off. So we were very fortunate to lighten up at about 4.1 and get back in at 2,990, which was that retracement to the black line, which was the previous resistance, now turning support, and was also the target. So you've got a confluence of levels there, the target of the head and shoulders down. And since then, you've just wanted to bias overweight Bitcoin. And in fact, moderate, very lightly leveraged shorts against the alts has actually allowed you to accumulate further Bitcoin while the Bitcoin price was appreciating.
Yeah, so where do we go from here?
Well, it's fascinating because we've got the forks. Now, the guesstimated date for this, and it's guesstimated because it's dictated by a block number, not a date and time. The guesstimated date for this is November the 16th. In other words, as these blocks are being created, and the time varies slightly depending on activity, is November the 16th. And essentially, as we were pre-discussing, it's almost a battle for the soul of Bitcoin. Is it the store of value coin? In other words, the legacy, the Bitcoin core element, or is it the high usage, high transactional coin, which should be low cost and regularly used? And so we're having these sort of polarizing forces fighting for the soul of Bitcoin. So Segwit 2 is about increasing the block size, which will improve the scalability and all the aspects in that argument.
So my understanding of that is that we've got a situation at the moment where we don't see as many trades as would otherwise be the case. So what they're doing is they're going to double the number of trades you can do between 2 people. Is that right? Or
they're going to stuff more data into a block.
Into a block.
So they're going to try to improve efficiencies. Instead of having 1 megabyte blocks, you're going to have 2 megabyte blocks. So that is what should initially deliver a 2 times benefit. But it's very worth bringing in a third dark force in all of this, and that we've already had a fork and have Bitcoin Cash. And it's worth remembering that Cash went straight to 8 megabyte blocks. So it's a little bit like you're upping your 1200cc car to a 1400cc, and I've shown up with a V8 5-liter. It is an improvement, Segwit 2, but is it enough to compare with what's already been done on Bitcoin Cash, which is an interesting argument. And there's also the technical side that thank you for bringing the chart up on. Essentially, we have, for traditional technical analysts, what is known as a symmetrical triangle setup. You'll have to check your data, because depending on which exchanges, it was BCH on certain exchanges and BCC, but we had an initial very big pump spike that's actually higher than on that chart that you have there. And essentially, we've had a squeezing down. This is against the dollar, not against Bitcoin. Against Bitcoin, it's a falling wedge for which it's just popped out of. So Cash has underperformed Bitcoin. Almost everything has since H2 has been on the go. However, it's now broken to the upside. And the argument is, could Cash actually be the winner as the Bitcoin Core and Segwit 2 fork? Because it highlights the positive features of what was done at Bitcoin Cash's level.
Yeah, it's interesting actually looking at this chart here. We're not as high as we were. Indeed, that spike that you're talking about there was what, up at almost 1,000, I think, wasn't it? And here we are now still trading below this spike here in August this year. So you're expecting this to accelerate faster than Bitcoin, main Bitcoin?
It is. We have a target of over $1,700, $1,750 on the what is known as Tether, which is a dollar proxy, and you can get proper dollar-based charts for Cash. So we think Cash is actually going to come out of this fairly well. Important point to remember on Bitcoin Cash, it's almost, some even refer to it as the China coin. In other words, some of the biggest miners, and a lot of that's driven where there's cheap chips and cheap power, which is of course coming out of China. The miners have a lot of power in this case, and one of the biggest miners, Xi'an, and certainly you have people like Roger Ver, who's one of the original Bitcoin investors, very much behind Cash. And this secondary fork actually highlights the original idea and justification for Cash. And Cash is no longer new. The problem Segwit 2 will have is it's a new coin. People are risk averse. So what's typically happened is when the new coin is created, they sell the new coin and they go scurry back to the original core, which is Bitcoin Core. And in fact, Cash was a victim of this. But it's found its flaw, as you can see technically from this chart. And I don't want to encourage bottom picking unnecessarily so, but it certainly found a floor level against the dollar. You can see the low volatility just before the break. We always say low volatility begets a move, because you suddenly get expansive. You've had your gap there, you've had a little bit of a retrace move, and now you're reasserting to the upside. So going into this, could there be a dark force, not actually in the current argument, but a primary beneficiary, because its enemies are being halved? In essence. Okay,
just staying on this chart, we're currently 630 on Bitcoin Cash. You're talking 1,700 on this. If we go back to Bitcoin Core, we're trading at 74.18. You're saying this is not going to accelerate as much, but nonetheless still take part in the rally?
I believe that we're probably, actually let me change that word, I assess on balance of probabilities that technically we're going to go into continuation. That's generally been the probability best with Bitcoin up and into the Segwit event. Post the Segwit event, you know, there's a little bit of an X factor, but if given the choice of 2X and Bitcoin Core, I will stay with the one that people know and are comfortable with. Remember, Bitcoin has 9 years behind it. Now you're spawning this newbie. Nobody really knows what comes out, and risk aversion is usually the trade. These are volatile enough markets without taking further risk. So most people going into this will probably, if they to sell one, will convert into Bitcoin. So Bitcoin to come reasonably well out of this core, and the Segwit 2 is going to be the one that might face a Bitcoin Cash moment.
Yeah. Just out of interest, when Bitcoin was first envisaged, 8, 9, 10 years ago, whatever, did we know then that all this would develop, or was it just a cryptocurrency it's going to be? Start trading?
I find myself chuckling about the notion of forks. It's a very good question. I mean, could this not have been foreseen? And where's the adaptability in it? All dynamic environments all tend to face up to things that weren't envisioned in the original essence. And I kind of call it QE for the cryptos, because essentially the big attraction for the store of value was the fixed number of coins, 21 million.
Yeah.
But in actual fact, by continually forking, we're actually getting a proliferation of new cryptos coming out of that. So we're getting an expansion in the system. We've gone up to well through 1,200 coins in total, but these coins are all close to the Bitcoin core, so they're going to be majors. These aren't, you know, small little alts that are coming on. So it is a kind of expansionary thing, and it's difficult to foresee. And this brings me back to the argument: store of value.
The soul of Bitcoin.
Transaction, high volume transaction. You can't have high transaction costs. But if people are holding for long term and it's kind of like a bullion investment in a vault, you don't mind paying once off and sitting with it, and it's being treated as a store of value, and the game is appreciation. If it's usability and it's low cost and the costs are derived on the current value of the coin as a percentage of that, you don't want appreciation and you want real high usability. So this is what's causing this. These are polarizing forces that are pulling it apart.
One final question is, you mentioned all these different Bitcoins. There are other cryptocurrencies as well. In fact, you can trade Ether on the IG platform. Do you trade any other Bitcoin, any other cryptocurrencies, or are you just solely concentrating on Bitcoin?
We do. The key thing is liquidity, though. You want to be able to make sure you can get in and out. You want to avoid getting into the realm where you're right down at penny stocks types levels. That's an entrapment. In other words, if you've got any form of scale, you want to be able to get out. So broadly, I would suggest that 80% of your trading should be done in the top 25 market cap, and ideally, you know, the 60% of that 80% being done in the top 5. So where we've done judicious and very lightly leveraged, because these are volatile markets, shorts, we've done that to gain Bitcoin, and we've done it against Ethereum and Ripple, which are number 2 and number 3 in the crypto. So being able to get in and out is still
Number
easy.
one priority.
Exactly, exactly. With any trade, you've got to work on the basis you could be wrong. Start money management, and also you could be wrong. So execution on getting out is critical.
Francis, thanks indeed for joining us. Francis Hunt from themarketsniper.com. Positive on the aspects of Bitcoin.